All right,
All right.
everybody. Thank you so much for making it today. We got Templeview on with us. So we used to have a different rep. I think, what was his name? Joseph Lee. Was that right, Mike? I think, yep.
Yeah, Joe Lee is
Joe
the
Lee,
man, the myth, the legend.
the legend, apparently. Well, anyways, Joe has been promoted or whatever. He's doing some sort of managerial stuff. So we've been given Michael as our new rep. Mike's been around for at least a year, I think, last I heard, which is good news. So you got to have someone at least for around for a year to do some loans. You don't want someone brand new. So right on, Mike. Thank you so much for joining us. So everybody, Mike and Templeview, you're gonna find them in the commercial bridge, excuse me, the 1 to 4 bridge bucket. I was happy to have them on today because we've been getting a lot of ground up construction requests, and I forgot that they do ground up construction, so that's good. So they also have some DSCR stuff as well. So if you want to find them in the lender bucket toolkit, you just go down there to the 1 to 4 fix and flip bridge bucket, and you'll find them there. And there's a lot of yeses, so a lot of green. That's good. Some 90% activity there. So we'll get an update from Mike on how he feels about our Excel sheet as well. So. Anyways, again, Michael, thank you so much for being on, brother. And I'm gonna let you share your screen now, if you would like to share your screen. And
Sure.
if you don't mind, Mike, telling us a little bit about yourself, because we don't know you yet. So why don't you tell us about yourself, and then kind of how you came to Templeview, and then you can give us a breakdown of kind of what you guys are taking on right now, and your sweet spot.
Yeah, sounds good. Just give me a second to figure this screen share thing out. Hold on. Can you guys see my screen here?
Yep.
Yep.
All right, excellent. For some reason, I lost visual of you guys though.
That's okay.
There we go. All right, excellent. Hey everybody, thanks for having me on today. I'm excited to be here. As John has already introduced, I am or have been with Templeview for about a year now. I've had a pretty interesting journey. I've been in real estate for my entire career. I grew up in a family full of real estate people. My mom's been a real estate broker for 50 plus years. My dad grew up in the construction landscape, eventually grew to the point where he was doing his own custom spec homes. And he was a builder. When he linked up with my mom, they became home investors. We specialized in doing distressed industry stuff. So we're real estate agents that specialize in working with companies like Fannie Mae, Freddie Mac, Wells Fargo, Bank of America, liquidating all of their foreclosure assets. So that's kind of my initial background. I got into that immediately upon graduating from college, and had been doing that ever since. Through the years, I've added just layer on layer of what I can to add to the real estate landscape that I work in, which is mostly with investors and all centered around investment. I've done some fix and flipping myself. I've flipped over 70 homes as an investor. I've done some wholesaling, so I've done some of that back channel networking. And most recently, about a year ago, I started doing commercial lending. I started kind of adding the dots, and I'm like, I could never do traditional residential loans, right? If you have a NMLS number, it would be a conflict of interest to be an agent and a lender on a deal. But in the commercial space, it is not an issue as long as there's proper disclosures that are made. So when I found that out, I jumped right on the bandwagon. And as a borrower, as an investor myself, I had been borrowing money from Templeview. I had many friends at the company, people that I've worked with. Before Templeview became Templeview, I don't know if you guys know this, but they were a company called BSI Financial that bought non-performing notes, and had various ways to liquidate them. We were an agent on that front, on the real estate side for that company. So when they decided to get into lending, a lot of the same people stayed on, and so that's where the relationships kind of came from. And I've for a long time, and before I ever started selling loans for them, I believe that Templeview had the best programs in the market, specific, specifically for fix and flip and ground up construction. That wasn't a standard conventional traditional bank product. Some of the things that we do, you'll get to know a lot of our leverages and things like that. There's other companies that have similar terms, but when you lump it together with the fact that we offer no payment options, we offer advancement of rehab draws for experienced lenders. We really do some things, in my opinion, that are proprietary and really sets us apart. Can help you win some business on your end as well as you're looking for places to broker loans to. So it's kind of my background. I guess before I dive into any loans, anybody have any questions?
What about, are you going to buy any of these unperforming commercial notes coming due?
So as a company, as a company, Templeview, we still have that arm that buys non-performing notes. They're just not as abundantly available as they were, in 2010, 2011, 2012, when the banks were really like rolling them out. So we will buy notes from other lenders. We do buy, whether it's performing or non-performing, we do buy tapes and still do mortgage workouts, things like that. So if you ever come across that, we will buy tapes of notes as well.
Right on. You pay us a fee for that?
Absolutely. Yeah. Yeah. We could pay you a referral fee or a broker fee for bringing any opportunities. Absolutely.
There you go. All right, guys. So if you hear some maturing notes, or maybe not maturing notes, but underperforming notes, excuse me.
Yeah.
All right, Mike. Thank you so much for the intro, brother. And it's good to hear that you have all that experience. So, firsthand experience is definitely valuable.
Thanks, man. Thanks. All right. So, Templeview, we're a hard money lender, as you may already know. Sorry about that. Turn that off. We offer, fix and flip loans where, you acquire the property, plan to rehab it, increase the value, and sell it when you're done, or keep it as a rental. We call that, the fix and flip loan. Some companies call it bridge, but we have a different bridge product. So don't want to get it confused there. So we refer to it as the fix and flip loan. Our fix and flip loans, this is kind of the general information here. As a company, any kind of retail loan, whether it's fix and flip, a bridge loan, or ground up construction, our pricing is always based off of an experience model. So we take a look at their track record, mostly what they've done in the last 3 years. And there are exceptions to that, but you can kind of use that as a general rule of thumb to do our pricing. And our pricing, we're very transparent as a lender. Our pricing is posted online. So anything I tell you here, even if you go to our generic website, like you'll see the pricing on there and for the different tranches of experience. So somebody with no experience, we can still fund them. We do them all the time, but their terms are going to be a little less favorable. So I'll kind of dive into that if that's what you guys want to hear.
Yeah.
With no experience or 0 to 1 units, that borrower is going to pay 2.25 points from our lending side, and 13% interest. Now, the benefit of what we have to offer them is we will wrap their payments into the loan amount, so they don't have to make a payment for 12 months. We also have a loyalty program where if a borrower closes 3 loans with Templeview, they automatically jump to what's called our platinum level, which is our absolute highest level. So anybody else, if they're not in our loyalty program, would have had to have done 10 deals in the last 3 years in order to qualify for platinum. So we have the loyalty program for newbie investors as well. It just helps them, they show loyalty to us and we help them get better pricing sooner in their career rather than later. We then have our bronze tier, which is 2 to 5 deals, which is going to be 2.25 points, same as before, but at 12% interest. Once you get past bronze, I'm sorry. That's going to be our silver tier. I apologize. Bronze is our lowest tier, 0 to 2. Silver is the second tier. Gold is the next tier, which is 5 or more deals in the last 3 years. They're going to be at 1.75 and 11% interest. And then
What's
our
the
apps,
LTV? I think the LTV is the most important thing.
I I agree with that as well. All right, so bronze and silver, sorry, bronze tier is going to be 80% of acquisition, 100% of rehab, up to 90% LTC.
Okay, so
So no
no
matter what, it's
experience,
always
80% on initial disbursement.
that's right. Yes, sir. So 20% down. Um, now if they can find an opportunity in an area that's not very expensive, let's just say the acquisition's 100,000, 20% down is not a lot on a fix and flip, and we're funding 100% of the rehab, all of your 6 to 12 months worth of payments. Sometimes we do have up to 24-month terms. So if it's a larger fix and flip, or you're in a jurisdiction where there's maybe permitting uh, delays that could be expected. Chicago is a big one. DC is an area where sometimes it takes people 6 months just to get their permits before they can even break ground. But anything, so silver tier is 85% LTC. So if they've done at least 2 deals in the last 3 years, and now this can include rentals as well. So it doesn't have to be fix and flips done in the last 3 years. It can include rental properties or any combination of the two. But silver tier is 85% leverage, so 15% down, and then gold tier and above is 10%.
Got it. Does this also include ground up construction, or is that a separate program?
Ground up construction is a completely separate program.
Okay.
And so, I can give you the rundown of each program individually, or we can kind of talk kind of wholesomely about all of our products.
What's your FICO score requirement on your fix and flip?
So we have a soft cap and a hard cap. So the soft cap is 660 and above. Basically, no questions asked if you're 660 and above, period. No matter what tier you're in, doesn't matter. If you're between 600 and 660, then that's kind of where it comes into situational acceptance. Somebody with more experience may have more leeway than, say, a brand new borrower.
Gotcha.
Now, there is a big difference between the bronze tier and every other tier. If they have no experience, we will cap them at a $500,000 loan amount. We don't want to be handing out, large loans to somebody who's never done it before, hasn't been in this business or space. Now, if you get somebody who's like, hey, look, I've bought and sold, my own personal properties. I've done it 5 times in the last 10 years, and I've done a 203K loan, or I've evidence of fixing it up. I just didn't do it commercially with my LLC. Again, we're a common sense lender, guys. So we're going to there's always an exception that can be made if it makes sense. So
How do
our goal
your
is not to
draws
hamstring
work?
people.
Do your draws, is there a do they have to request reimbursements, or are you guys kind of funding the draws?
So yeah, no, that's a great question. That's a two-part question. So the first thing is we offer reimbursement draws to bronze and silver tiered borrowers, the less experienced. But if you show us that you have the requisite experience, we actually advance your rehab draws. So you go to closing on Monday. By Thursday, you should be able to go into your customer portal and request your first draw. Excuse me, which can be up to 20% of your rehab budget. So depending on the size of the deal, that could be a sizable amount. There are limitations. So if you're doing a job that requires like plans and permits, we're not going to release a ton of money until you have those plans and permits in place. But let's just say it's a cosmetic rehab. We're not requiring plans and permits. You can go in, get 10, 15, $20,000 advanced to you before you've done any work and have to show evidence of that work. Again, that's for the experienced borrowers, but for the less experienced borrowers, it's a reimbursement schedule. We have a customer, as I was just saying, we have a customer portal that they'll be given access to within, you know, usually 48 to 72 hours after closing. It takes us a couple days to get them set up and all that. Once they have that set up, they can go in, request a draw directly from their portal. It'll send them a link to an app where they can take the photos of the property to show the work that's been done, and they can get the draw funded within 24 to 48 hours.
Got
So
it.
it's a much faster process than, the old way was uh, archaic. We had to send inspectors out, and it was crazy. So
One of
everything's
our,
done. Sorry, go ahead.
that's good. One of our brokers is asking about your white label program. Can you explain to us how you are able to white label either a term sheet or do you go all the way through closing? Is there the ability to white label with you guys or mask the lender?
Yeah. So that goes beyond our broker channel. We have three different options. We have referral, we have broker, and we have what's called TPO, which is our what we call the white labeling program. Um, so in order to get signed up with TPO, typically you have to establish a relationship with Templeview. So we're looking for somebody who's funding at least $1 million a month for 3 months in a row. Um, and typically we want brokers that maybe there's multiple employees, something a little bit bigger than like, somebody who's sending a loan here or there. Because when we get into white labeling, like you truly have access to all of our product, and you get to use our back end, and you get better pricing. So, like on the DSCR, for example, our white label brokers have an eighth of a point better pricing than I can provide as a employee of our company. And you guys get paid out like yield spread on deals. Um, uh, so our mandatory like points and things that we charge on our loans, if you're white label, uh, Templeview just charges 0.25 points. So our standard pricing may be like 1.25 for the most experienced borrower. The broker captures that 1 point, and then if you want to charge additional on top of that, you can. So right now, if you want to make 2 points on a deal, it would be our 1.25 as if you're brokering to us, and then you'd have to charge your 2 points on top. So the borrowers, you have to go sell a loan at 3.25. If you're white label with us, you can get your 2 points by charging that same borrower 2.25. So it's an easier sell for you guys.
Yep, that's
Um,
the lowest, that is the lowest fee structure that you guys that we've come across is 0.25 points if we are, white label approved. So
that's
that
right.
white table funding approved. So the table funding probably requires more underwriting and more responsibilities on our end. Can you kind of outline that for us?
Yeah, I mean, so at that point you have full access to your broker portal, the TPO portal. You're required to collect all the documents, do all of the direct to borrower conversation, selling, all of that fun stuff. You'll have support system within Templeview. Um, so you'll have access to a processor. And you'll have, we still do the in-house underwrite for you. And it's a in-house, they're in
Right,
office. Um, and, but like I said, you can white label, you can charge, you can
right,
upsell on rate and get a yield spread on it.
right.
It's the most lucrative.
That's good.
But
What if we showed, if we were, would we be approved if we could show closings from other lenders instead of you guys? So let's just say we have a bunch of closings we've done over the last few months and we can just show evidence of that. Would that be grounds
yeah,
for approval?
yeah. So typically the general rule of thumb is either $1 million a month with us, or at least 2 million a month overall. So if you're doing more than 2 million a month and you want to get signed up to white label with Templeview, then you can through the TPO portal.
There you go. So got to put the work in, guys.
Yeah. Yeah, I mean it honestly it's the best path once you really get going. It's a little tough to get there. I will say this as well. There's a $2,500 fee to get signed up to white label with us. It's a one-time fee. It's not a yearly fee or, but there is a fee, and the reason is, as John was alluding to, it you can do a lot of business. Most of the brokers that are white labeled with us that actually, um, utilize us mostly for their funding. I mean, they're doing 7, 10, $15 million a month. And like I said, if I originate that, I get pennies compared to what the white label brokers get. So
How deep does the white labeling
it's
go?
lucrative.
Does the broker show as the lender of record on the HUD? What about the
Hmm.
loss payee clause on insurance? Like, how deep does it actually go to the point where Temple View is revealed or not revealed?
That's a great question. I don't know if I know the answer to that, quite honestly. If anybody has direct questions on that, I'm more than happy to set up another call, and I can certainly get answers for you. Um, I'm not really. I mean, as it currently stands, I have one broker who signed up for TPO. The rest of the brokers I work with are all just traditional brokers, and some that just do referral.
Okay. Yeah, find out for us. Let us know. I'll put you on a chain.
Yeah, I can do that.
All right, great. Does anybody have any questions about the fix and flip program? And Mike, if you can send out those tier sheets and everything after this call, that'd be great. And then I can add it to the email that goes out. And by the way, it's not just our guys on this call right now, it's everybody else as well who could not attend. So if you could
Sure.
send me like your tier sheets and everything so they know what gold is and all that, that'd be
Yeah,
great.
yeah, absolutely.
Anybody have any questions on the fix and flip before Michael moves on? All right, Mike, let's get into
Cool.
the ground up, brother.
All right, man. Ground up is where it's at. So the ground up again. So we do have tiers with the ground up, but it starts at gold and goes up. So um, our ground up product requires somebody to have at least one ground up experience. Period. So if they've never done a ground up deal, unfortunately, it's not something that Temple View is going to be able to fund. The second they do have one unit of ground up experience, then we can fund them all day long. What we typically tell people who are fixed, a lot of times that ends up being like a fix and flipper who wants to, up their game and move on to the you know, next phase, which is doing ground up construction. What we typically tell them is partner with a builder, right? Have your first deal be with a JV partnership with a builder, somebody who has experience doing a ground up. That builder doesn't have to be, 100% partner or 50% partner. I mean, they could be, anything as long as they're on the LLC and they're included in the loan. We can do it. So that's kind of the workaround there. But once you have experience, you just have to have 5 units of experience in the last 3 years. It could be anything from ground up, rental property, or fix and flip. So you just need the 1 unit of experience of ground up, and then at least 4 other deals that you've been a part of or done in the last 3. We can sometimes stretch that, but like if we have a builder who's like, "Hey, I've built 3 on the street, but that's all I've done for the last 3 years," we're probably not turning that person away, right? So there are, caveats and changes to this. But um, one of the cool things about our ground up product is we will do 75% of the acquisition, and that can be either land that's ready to develop. So it can't be raw land. It has to be basically shovel ready dirt. But we can do 75% of the acquisition. That can include a house that maybe is going to be torn down, um, or something. If you're popping the roof off and building 3 levels, we would consider that a ground up deal, not a fix and flip. So regardless, we can do 75% of the acquisition up to 100% of the rehab with a maximum 90% LTC. It's one of the highest loan to costs in the industry. And the rates are either 2 or 2.5 points and either I believe 11.5 or 12% interest. Let me just double check that. Or I'm sorry, 12 and 12.5. Please further elaborate shovel ready. So yeah, I mean, basically entitled. So permits are ready to go. Vertical construction. So we're not gonna, fund, uh, the soft costs to get land ready to build. So from the perspective, some people like buy land and they have to clear it out, uh, get it perked, bring utilities in, so on and so forth. We're not going to finance any of those costs.
Yeah, they're just financing vertical construction. That's common with most of the lenders we work with. Vertical construction, no horizontal.
Yeah. Yeah. So like some people come to us, oh, hey, we want to take this raw land and convert it to 26, lots and pour pads and this guy, we can't do any of that kind of stuff.
Yep. And Raj, I would assume he's saying like the trees got to be gone. Okay. So shovel ready, it's got to be cleared land, utilities essentially lined up and ready for foundation, which would mean permitted and all that. So.
Right. And so, sorry,
cool.
caught me off guard there.
What
so,
else you got there on the ground up?
Yeah, I mean, so we can offer 12, 18, 24-month terms on the ground up. Our basic term is 24 months, unless the, builder shows that they're, consistently doing deals and don't need that much time. We also we go up to 75% of the after repair value. And within that, we will allow them to incorporate 24 months of their loan payments into the loan, meaning the builder will not have to make a loan payment for 24 months. What that saves them from is having to show an exorbitant amount of liquidity, because if we're financing their interest payments, we don't require them to show any bank statements of any kind. No asset verification. This is big. Sometimes, people partner, they JV. Some companies that require the asset verification has to be in your bank account for up to 2 months. Sometimes it's hard to get your partner to, lay it out, before a couple days before settlement, whatever. If we are escrowing your payments, we don't require any asset verification.
What about multiple lots at once? Because you got a builder,
Yeah, we can do multiple lots. Each one's going to be considered its own loan. So that's important when we get into loan limits. So our maximum loan amount is $4 million. But if somebody's doing like a development, each lot, if it's on a its own tax recorded plot, each lot will be considered one loan. So we're not going to portfolio that. We don't offer portfolio or blanket loans. So like if they're doing 5 houses contiguously, it's just going to be 5 different loans, which helps with those loan limits.
What is the max on the borrower extended credit?
On ground up, I'd have to look that up. But I mean, we have funded multiple borrowers, upwards of 10, 15, 20 million. So I think over 10 million does require management review. So 5 deals, 2 million each, or 1.9999 million each, we can do. Anything over 10, now we start taking a look at, okay, what are their liquidity? What's their, we'll take a look at some other factors. Okay. Ground up does require a credit score of at least 680, and that is a hard stop. Meaning if it's under, 678, I can't do it. Hard stop, 680.
Got it. Understood. All right. Anybody have any questions on a ground up product that Temple View is rolling? Okay, perfect. I know, Mike, I know that you have a DSCR product like every other fix and flip lender on the planet. So why don't we dive a little bit into your DSCR? Just tell us where you might, be a better fit for borrowers than the other DSCR lenders on the block, and then we'll just get into how to submit a loan to you, and we'll call it.
All right, excellent. DSCR. What can I say about it? I love it. No, what I can tell you is this. Templeview is aggressively going after DSCR right now. If you're a broker that routinely gets DSCR loans and you want to come to a company that's like we are aggressively targeting DSCR.
Okay.
So our
Can I
price
ask you?
points,
Can I ask you some aggressive questions?
absolutely.
Okay. So, question number one, what's your seasoning on cash out refinance?
If somebody's done a rehab within the last 6 months, we have no seasoning requirement.
Okay, gotcha. So they bought the
Now,
property, they rehabbed it, and now they want to do a cash out on appraised value. Does it
that's
have
right.
to be occupied, or is vacant okay on that cash out?
Vacant is okay. Now, we have two terms for cash out internally, and I think it's important to distinguish. We have a true cash out loan, and then we have what's called a rate and term refund. Um, the rate and term refund loan requires zero seasoning whatsoever. We take a look at all of your costs when you purchase the property, which could include, if you got a loan, it could include your down payment and your closing costs. If you paid cash, it includes, again, what the purchase price and all your closing costs. Then we look at the cost basis. How much money did you spend on the rehab, so on and so forth. If we're refunding all of your cash and up to $2,000 more than what you put into the deal, we don't consider that a cash out. We consider that a rate and term refund. So even though you may be receiving cash from the closing, from the refinance, it goes as a rate and term to us. And the reason that's important is rate and term has better terms overall. Lower interest rate, lower points, lower everything. And rate and term can go up to 80%, right? So, if your numbers were a little tighter, but you did the fix and flip anyways, you want to get all of your cash out, we can go up to 80% on that. Most companies will limit cash out up to 75.
Gotcha.
So that's a way
But
that we can get that extra 5%.
right, but that's no cash in the borrower's pocket, basically. Your rate and
Well, yeah, oftentimes the borrower is receiving cash, right? So let's just say it's a Burr client, they bought it with a hard money loan. They had to put 10 or 20% down, right? So we're at least refunding them the cash that they put down. A lot of times the rehab's covered, so the cash they put down is their down payment plus their closing costs. So if they bought a house for $200,000, say they put 15% down, that's 30 grand plus closing costs might be 36, 37, 38,000. They can pay off their existing loan and get that 37,000 that they put down into the property back.
okay.
So it can be a cash out.
Got it. On appraised value, that's what you're going off of.
Right, exactly.
All right. Anything else to elaborate on that point? Any disclosures before I get to the next aggressive question?
So yeah. So if it's a true cash out, meaning you're going above and beyond what you spent, you just created all this equity and you wanted to pull it out, there is a 3-month seasoning period. So just keep that in mind. But most of the people we deal with, especially the ones that are doing like the Burr stuff, that rate and term refund more than covers what they're looking to get, what they're looking to do.
Got it. Okay. All right. What about freshly deeded individuals seeking cash out? So this would be an example. You got a Burr strategy that took place, and the borrower that did the rehab, their credit's jacked up. So they mostly use cash and all that. And now they want to do a cash out refinance, but they don't qualify due to your FICO requirements on your DSCR product, which I don't know what they are yet, and they freshly deed a new individual on title to pull cash out of this asset. How do you feel about freshly deeded individuals?
So freshly deeded, especially for cash out, it's still going to require seasoning. So it's going to be that 3 month seasoning period, no matter what. I had like this goes for inherited properties, um, a scenario like what you just described, so on and so forth. Um,
Okay,
what
three
I've
months.
seen, yeah, three months minimum. Yep,
Understood.
yep, 3 months minimum.
What about on a rate and term refinance? Is it the same policy that you have for the rate and term refund? So freshly
I
deeded individual, but our actual borrower, has debt on it, and they deed their buddy on in order to rate and term them out of this loan. How do you feel about freshly deeded
Interesting.
rate and terms?
I would have to look into that. Yeah, I'd have to look into that. One of the better things that I can think of would, I mean, this would be if they own it like in their personal name and then they deed like a friend on. Because I'm
Yeah,
thinking
they're
if it's in their LLC, right, you would want to add your friend as a member to the LLC. You would,
yeah,
you
let's
know,
just say they were just added to LLC, or you could say added to title, whatever. Similar situation. But yeah.
yeah. I mean, I think the easiest thing would be to add the party that you want, effectively the new primary guarantor. Add them to the LLC and do like a transfer of ownership, right? Of the LLC, not the property. I wouldn't freshly deed the property. I mean,
Okay,
first you're
so
gonna,
we're adding the borrower, this person to the LLC, but the other guy doesn't want to come off the LLC. Our bad credit, our borrower who has the debt doesn't want to come off the LLC. Just a freshly added guarantor to rate and term him for the credit qualifications.
um, yeah, no, I mean the guy would at least on paper would have to come off the LLC at least for a brief period of time,
Okay,
right?
got
We'd
it.
have to do a transfer of ownership of the LLC because that's the only way to really make it a refinance, right? If we're deeding it into somebody else's name, I mean, yeah, I see what you're saying. I think that the more time effective way would be to add the person to the LLC, and then just do a letter of explanation, like, hey, my friend, we were partners on this thing. I bought it in my LLC. We decided to add him and remove me off the LLC in order to qualify for the
Okay,
DSCR loan.
so it's just a rate and no seasoning on rate and term in a situation like that?
No, if there's a loan that needs to be paid off, we have no seasoning requirement for rate and term refinances.
Okay, got it. How about another question? So, wholesalers bringing the deal in, you have this kind of double close, whatever situation, because he's selling the contract to an investor who's selling, is buying the property.
Hmm.
From the wholesaler bought from the seller, and our borrower is buying from the wholesaler. So, how do you feel about these double close transactions?
We do not like double close. We are fine with wholesalers being involved. Wholesalers can get up to 10% of the purchase price as the wholesale fee.
Okay,
Anything above that, the borrower has to pay.
all right.
Um, so, $200,000 purchase price, the max wholesale fee on that can be 20 grand.
Got it. But
Um,
you're not doing a double close. Our borrower needs to have a contract direct to the sellers.
um, No, no. So it can be a wholesale contract. I mean, you have the A to B contract between the seller and the wholesaler, the B to C between the wholesaler and our borrower. Um, if the wholesaler decides to buy it and then turn around and try to do that and double close it, that's where we hit the issue. It'd be
Right.
better to just have them assign their right to the contract and then our borrower close it, but the
Okay.
borrower does not have to be direct to seller. There
Gotcha.
can be a wholesaler involved.
Got it. Got it. And when does that assignment take place for you? It's
At
got to
closing,
happen. Yeah, it's got to happen at
yeah,
closing. Okay. Got
at
it.
closing, yep.
All right. All right. Now let's get into seasoning on source of funds. So how do you feel so we're doing a purchase, guy wants to buy the property. Do you season source of funds on your debt service product?
On the DSCR, yes, it's 2 months asset verification. It's whatever projected cash to close is plus 6 months of payment reserve.
Okay. So
Um,
that's
so
that's I would say that's not aggressive, calling you out, which is okay. That's pretty conservative on the debt service side, but that's okay. It's pretty common. It's not like you're not one of the guys, but
Yeah.
6 months reserves plus 60 days asset verification.
Yes. Yeah.
Got it. No worries. Fantastic. Um, let's see, foreign
We
investors.
do. Sorry, go ahead.
Mhm. Oh, I was going to ask foreign investors, but if you have something to add to that point, feel free.
Um, yeah, well, yeah, foreign investors, like I-10 buyers, things like that. Unfortunately, we don't do.
Okay.
Gotta have at least a green card. Gotta have a social security number.
Okay. Got it. So we're talking foreign nationals who are here legally with a visa and a social security card. No
Yes.
foreign investors, no Canadians investing in America or Mexico coming into America. Okay, got it.
Nope. Unfortunately, no.
All right. All right, that's okay.
Um, what was I gonna say on the DSCR? Um, sorry, man. A
How
lot of
about how
information
about
flying back and forth.
how about rural assets?
So on DSCR, we can't do rural. Um,
Okay. How
on
about
some of
fix and
our
flip?
other programs, we can. There's LTV hits and things of that nature. It gets a little hyper specific when we get into it, but um, for fix and flip, for bridge loan, we can do rural.
Okay, great. All right. And I had one other, but it's slipping my mind. Anybody else have any aggressive questions on the DSCR to try to differentiate Templeview's product from the other
Yes.
people? All right, go ahead.
What are the rates? Based.
Right now, so everything that we have is going to be our base rate. So 0 points, assuming it's a 5-year PPP, unless it's in a state that doesn't allow 5-year PPP, prepayment penalty. But at 60% LTV in top tier credit, we're at 7.125, and it goes up incrementally from there. So at 80% leverage, was our absolute highest leverage, and our lowest credit tier that we allow 80% leverage, we're at 7.875. This is with 0 discount points, 0 points to Templeview, just our standard $1,000 underwriting fee and $199 application fee. So the reason why that's important is you guys as brokers obviously want to make your points and fees. When we price at our base rate, the only points that are going on there are yours. We've actually just rolled out specifically to DSCR a broker portal, and I know that goes against what I was saying earlier, John. I apologize, but as I told you, we aggressively want DSCRs coming in. So if you submit a loan through our broker portal, which you'd have to work with a executive assistant like myself to get that set up. But when you submit loans through that portal, you can make up to 4.5 points on any of the loans you submit. Obviously, I mean, you're going to be required to sell it, so that's up to you. But you can actually upsell rate up to a full percentage point and receive up to 2 points in additional yield spread. So in effect, you as the broker can make up to 6.5 points on a broker DSCR deal to Templeview Capital. And I think that's pretty awesome.
Yep, you can sell if you can sell velocity rates on the Templeview product, then you got
Yep.
something going on. So, how do you feel about condo hotels?
Condo hotels. Well, so even with DSCR, we're capped at 1 to 4 unit residential properties.
Yeah,
So
it's a condo, single, it's a one unit, like SFR
gotcha.
condo that is part of a group of condos that is managed by a front desk, right?
Got it.
It's an Airbnb situation, but it's more like corporate Airbnb.
I would have to look that up, John. I'm not, I haven't come across that myself personally.
Okay.
I'll have to look that up and get back to you. I will tell you, we were one of the first lenders in the space to do DSCR based off of short-term financing. And it does not have to have a 12-month history of short-term, history in order to qualify with us. We will qualify short-term rentals off of AirDNA projected revenue. The only caveat is it's got to have a market score of at least 50 or above, meaning it has to be like a legitimate, market that supports short-term rental.
Okay, gotcha. So if someone wants to do a cash out refinance on or purchase on a vacant asset on a DSCR product, you'll look at projected, market-based Airbnb or rents or whatever.
That's right. Yep.
And fantastic. That's pretty good.
Yeah.
That's pretty good.
It comes in handy a lot because again, in a lot of the beach resort towns, the price point plus the interest rates where we're at makes it hard to get a 1-to-1 DSCR ratio without looking at short-term income.
Right.
And so, if you're buying a $350,000 condo at the beach, long-term rent may only come back at $2,200 a month.
Right.
Well, your mortgage is probably going to be $2,200 at least.
Right.
So, but short-term rental might show $70,000 a year, which averages out to, $5,600 a month or whatever that is, right? And we can take up to 90% of that total. So we have a 10% vacancy rate if the property is in fact vacant. So we're not taking 100% of that projected income, but damn near close.
Got it. And I'm hearing 1-to-1 ratio is what you guys are shooting for.
So we can go as low as 0.75. But there's specific, so somebody has to have 720 plus FICO. We may look at, income and 12 months of statements or, things of that nature, for further qualification on lower than 1-to-1.
Got it.
But anything 1-to-1 and above is, fits in our standard tranche.
Got it. On our bucket list, I have you guys listed in the debt service area, the 1-to-4 perm at $2 million max loan amount. Do you work with jumbo SFRs like in Beverly Hills and what have you, or are you really tight to that $2 million mark as max loan amount?
We're very tight against it. I've seen maybe 2 total exceptions ever made to go above and beyond that loan amount. Quite honestly, it's because it's hard to get, properties to rent at above what the mortgage is going to be in those price points.
Right.
It just very rarely do we come across it. So I wouldn't say don't send it in. Give me a call. We can talk about it for sure. But
Perfect.
yeah.
I get it. That's why you guys come to me for the DSCR, because there is no DSCR on my perm product. But that's okay, dude. I really like your product. I think it's solid. I think we'll be able to work with this for sure. The rates are great, and if you can get 2-point yield spread and there's no points on the front, we crank a couple points on the front. I think our brokerages are doing pretty well, and I think borrowers are going to be happy with your underwrite here as well. So that's good.
Well, I'm sorry. What is again the FICO for the SCR? I don't think you mentioned.
Yeah. So our minimum FICO is 660. And
that's minimum hard FICO without exception.
Yes.
And remember, Joseph Lee used to be our rep. It's now Mike Burdett. So if you see Joseph's contact information, just change that. I've already changed it in our bucket list, but if you guys have a separate bucket list, just make sure at the end of this call to take Mike's information, because Joe's not our guy anymore.
Appreciate that.
Yeah.
Trying to think of any other benefits to our DSCR that maybe sets us apart. I think the ability to earn the yield spread is obviously huge. And how to submit those deals, or how to submit deals just in general. With anything else, I mean, the more information we have up front, the better. We do have a pretty long list of guidelines and things of that nature that we work off of. There are some strange scenarios and things that you run into from time to time. So everything that you submit, you would submit directly to me. Usually what we'll start with is, you don't have to give me the full application and all that kind of stuff. Just give me the basic details. I'll run a term sheet for you based off of the information that you've collected. Once you have the term sheet, you sell to the borrower, then we'll go through the process of what next steps we need to take. We have several different applications depending on the product type. DSCR can be submitted through a portal, but everything else, retail, fix and flip, ground up construction, bridge loan, those all would still need to be manually submitted, via email to me. And so I always just recommend give me a call or shoot me an email. I'll probably give you a call before I do anything just to go over it. I like to be very thorough up front because the last thing I want to do is be coming back to you saying, hey man, sorry, something popped up. We're not able to do this loan. Now you got to go back and tell your borrower you just wasted 3 days, 4 days, whatever. Wasting their time, wasting mine, wasting yours. And those are just the conversations I never want to have. So I want to take a look at the comps. Like my real estate background does come in handy, especially when it comes to valuation and things of that nature. I'm always going to take a look, like, do these values that the borrower submitting make sense? I don't want to have an appraisal come back and, completely unexpected, we're $200,000 below where we need to be. Well, how did that happen? Right. And typically if I've looked at the deal up front and I've looked at some of the comps, I can go back before it even gets to you as the broker and I can rebut that appraisal. And I've done that and I've won. I actually have not lost on an appraised value where I disagreed with the value. So I'm not saying I've been doing this forever, but I think it's 4 or 5 times now where I've had an appraisal come in lower than we were expecting. We submitted rebuttal and argument and got the appraisal raised each time.
That's not
again,
easy to do, Mike. That's not easy to do. So that's actually quite impressive. So that's a great sales point, brother.
Well, I'm only saying this, like, this is not to say like I can pull rabbit out of the hat. This is me saying I do the homework, I look at the comps, and I understand the market. And so when I present it to the appraiser, like, hey, I think you missed XYZ Main Street, XYZ, whatever. Again, it just becomes a common sense thing. A lot of these homes are in neighborhoods where, you have a different ranging of values, right? So if there's 30 properties the appraiser could choose from, and he chooses 3 of the 30 that aren't the best reflection, even though they fit, right? There's always an argument that could be made. So that's big. Making sure that the property, sometimes a property may be considered rural by an appraisal standpoint, but it may not appear that way because if you look it up, it's in a subdivision, but that subdivision's in a town that has 2,500 people in it. So that just like those little nuanced things, I want to do as much of that homework up front so that we don't run into any issues on the back end. So hopefully that helps. I always try to turn my like term sheets and requests for terms within an hour or two. If you submit stuff to me, like, you're not going to be sitting there waiting for 24, 48 hours to get a term sheet from me. I crank them out. It's one of the things that, I most focus on. I do have a team that I work with, a solid team. I have what's called a sales support person who helps me with the, not origination, but the onboarding of loans. So I'm here, mostly helping my clients and brokers like you guys.
Right on. Well, Mike, you've been great, brother. I appreciate this this call. This is hands down the most I've learned about the Templeview product since we did bring them in. We shoot scenarios over to you guys all the time, but we end up using a lot of other guys. But in this case, now that I know more about your product, I'm definitely more likely to bring deals to you. And I'm sure Eric and everybody else was on this call and not on the call are going to watch this and want to send you more deals. So I appreciate it, brother.
Yeah, I would love to, in the future, maybe learn about some of those scenarios that, like, why you do take stuff to other lenders,
Yep.
Having that, information that I can take back to our team, because they value our input, they value the input of outside persons. you know, we are and this is why I went to work for them. And this is the God's honest truth is, you know, like with the advanced rehab draws, with being able to wrap payments and not have to make a payment. These are issues that borrowers kept bringing up, and they kept hearing over and over again. They're like, well, how can we structure our product to make it the best, you know, without sacrificing points? And, you know, money's got to be money, right? But
Yeah.
what other ways can we structure it to make the borrower experience the best? So
And
any
Raj
feedback?
is saying soften the white label requirements.
I would, you know, if I could, but
No,
yeah,
no, you got to send it up. Remember
we're
what you
we're
just
gonna
said?
send that up. Sure,
There
sure.
you go.
Yeah,
There you
yeah,
go.
yeah, yeah.
I appreciate it,
I
dude.
just know that you know, when they get people out there selling our products, they want to make sure that those people are committed to you know, to doing business with us. That's all.
Yeah.
So
No, that makes sense. That makes sense.
that's why they
Totally.
want that track record there. But
Totally. Well, that's a great, you know
yeah,
what, and Raj, the thing is, man, they're incentivizing you to send more business to them to gain that track record. So, you know, you got to incentivize somehow. Everybody can't just issue you know, really thick, especially one like that white label program where they're giving up points, you know? So,
yeah.
dude, I
And
appreciate it, Mike.
I will tell you this, you know, our guidelines, man, these things are 70, 80 pages deep on each individual project. So when you get into the white label, you're going to have to know and understand all of our guidelines. Now,
They're,
I'm here to help, so I'll always be here as a resource for you. Um, you know, but when you're white labeling and you're out there creating term sheets and sending them to people, um, you know, you got to know your stuff.
yeah, you need to be on point. So where
Mhm.
Michael would be doing the term sheet, you're doing the term sheet. So more authority, which means
Yeah,
more coming down on your head, basically.
yeah.
So makes sense. Makes sense. All right, guys. Well, thank you so much, Mike. Once again, God bless you guys, everybody. You guys are going to get an email. Mike, if you want to send me anything that you want everyone who watched this call to have your sheets or whatever you want me to send out, let me know. And thank you.
Awesome. Thanks for having me, guys. It's been a
Yep.
pleasure.
Yes, sir. Take care.